Hello everyone, welcome back to Nandu's Equity. Today we are going to have an exciting exploration of Parag Parikh FlexiCapFund. Whether you are a seasoned investor or just starting out, this fund is a game changer. Join me as we uncover what it makes it stand out in the crowded investment landscape of mutual funds, whether it is its flexible approach or its track record of delivering impressive results year over year. So let's go deep dive and have a complete detailed analysis of Parag Parikh FlexiCapFund today. This fund is managed by Parag Parikh Financial Advisory Services Limited, simply called PPFAS, that is how it is famous for, named after its founder, late Mr. Parag Parikh, a renowned figure in the Indian financial industry. Mr. Parag Parikh was known for his deep understanding of value investing principles and his contributions to investor education through books, articles and seminars. Mr. Parag Parikh was known for a lot of visionary in terms of creating awareness among investors. He used to write a lot of different kinds of letters to the investors and also educative information in his letters. He always believed about long-term investing. And as he said in one of his first letters to investors, you cannot sow something today and reap tomorrow. A seed sown has to go through various seasons before it grows into a tree. So in the case with investments as well. So also he believes that there is a major missing link which is called behavioral finance. This is where most investors lose out. They fall prey to their own and sometimes others' mistakes due to the use of emotions in financial decision making. So he always wants the investors to keep away from the behavioral part, like the emotional part when making investment decisions. And also he believes there is no shortcut, so we need to really focus for long term in terms of investment without any shortcuts. You might have seen a tortoise as a logo, and they call it as Professor Tortoise, and it is something to relate with long-term longevity, because tortoise stands for longevity, and the mutual funds that they have created, they invest for long-term and are unaffected by any short-term vicissitudes of the market. So similarly, just as the tortoise hibernates in winter only to emerge regenerated, they also think that sometime we need to really wait for the right time to really ripe. Before we dive deep into Parag Parikh FlexiCap Fund, we need to understand what is a FlexiCap Fund. So a FlexiCap Fund will have that flexibility in terms of capital allocation across different market capitalization. It could be large cap, mid cap, small cap, and various sectors within that. So normally, like a multi-cap fund or other balanced funds, they will have predetermined, allocation limits, predefined investment mandate. But for FlexiCap fund, you won't have that. Like they can flex it according to the market conditions and also valuation and other opportunities within the market. All those will be at the discretion of the fund manager. This fund has delivered competitive returns compared to its benchmark and peer group over different time zones. Its ability to generate alpha especially during market downturns, has been a key factor in attracting investors' interest. However, it's essential to note that this fund's performance can fluctuate based on market dynamics and the fund manager's decision. We have seen the Quant Small Cap Fund. I can say that this fund is totally opposite to the Quant Small Cap Fund. So if you look at Quant Small Cap Fund, we saw that the fund manager does a lot of changes in the fund's holding quite often. Whereas in this particular fund, it's totally opposite. They believe in long-term investing and also value investing. They do not go behind any kind of changes. The fund manager's disciplined approach towards stock selection, focusing on companies with robust fundamentals and competitive advantage, adds a layer of risk management. Additionally, the fund maintains a balanced portfolio allocation which cushions against extreme market movements. talking about the fund manager, definitely we need to deep dive who that is and what he does. Rajeev Thakkar, he's another star fund manager who's managing the Parag Parikh FlexiCapFund. So he has over 3 decades of experience in various segments of capital markets such as investment banking, corporate finance, securities broking and fund management. He is currently the CIO and director of PPFAS and also the lead fund manager of this FlexiCapFund. So his association with PPFAS is quite long. It's almost like 23 years, and also a strong believer of value investing. And also he had shared that his 4 major or precious investing lessons. He says that do not leverage while investing. He talks about loans and taking additional leverages while investing, and do not trust easily. Again, he talks about the IPOs. He wants to really trust companies that are existing for long term. Quality of the promoters and management matters. So that's more about the trust and integrity part. And of course, quality of business, which is nothing but the long term view. So Rajeev Thakkar is quite famous for his value investing principles, and also he has even given in one of the interview that he does not want to make a portfolio like a zoo which will have a sample of everything. I think the question was about why he does not have some of the top performers of the year or from a short period point of view. So he believes in the long term, which is the core principles of the Parag Parikh, the late Parag Parikh as well. This fund follows a value investing approach focusing on intrinsic value of a company rather than its market price. The fund manager seeks to identify undervalued or overlooked stocks that have the potential for long-term growth. By purchasing these stocks at a discount to their intrinsic value, the fund aims to generate superior returns over a long period of time. This fund employs a bottom-up approach to stock selection, meaning that the focus is primarily on the fundamental analysis of individual companies rather than macroeconomic factors or market trends. The fund manager conducts in-depth research to assess the financial health, competitive position, management quality, and growth prospects of each potential investment. This rigorous analysis helps in identifying high-quality companies with strong growth potential. This fund typically maintains a concentrated portfolio of high-conviction stocks. Instead of holding a large number of stocks, the fund focuses on a select few that meet its stringent investment criteria. This concentrated approach allows the fund manager to allocate capital more effectively to the best investment opportunities, potentially maximizing returns. Parag Parikh FlexiCapFund, in addition to investing in India, it has a good exposure to international markets. The fund invests in overseas stocks through avenues like American depository receipts, global depository receipts, and exchange traded funds. This global diversification not only broadens the investment universe but also reduces country specific or region specific or currency specific risks. This has a flexibility to invest across market capitalization and sectors based on prevailing market conditions and investment opportunities. The fund manager has the discretion to adjust portfolio allocation dynamically in response to changing market dynamics, valuations, and risk return considerations. The fund adopts a long-term investment horizon with the aim of holding stocks for the medium to long term. This patient approach allows the fund to ride out short-term market fluctuations and capitalize on the compounding effect over time. Investors in Parag Parikh FlexiCapFund are encouraged to adopt a similar long-term perspective to fully benefit from the fund's investment strategy. So this is really not meant for short-timers. Parag Parikh FlexiCapFund typically has a low portfolio turnover compared to many actively managed funds. This indicates a long-term investment approach, with the fund manager preferring to hold on to quality stocks for extended periods rather than frequently buying and selling securities. The low turnover also helps in minimizing transaction costs and also tax implications for investors. I have captured the snapshot of both growth direct plan and regular plan. You can definitely see there is a huge difference, and why I always prefer investing in direct plan. So if you see the regular plan, it has an expense ratio of 1.32 versus the expense ratio of direct plan is just 0.57. Big difference. And also if you look at the NAV, 71.5 and 77.3. So here itself we are kind of gaining almost 5 to 6 points in terms of NAV. And also look at the percentage of annual returns. Even that is quite different. 36.7, 37.8. So this is a high level snapshot, and the fund size is about 60,000 crores already. It has crossed 50 and 60,000 now, and a lot of fans following this particular mutual fund, particularly long timers. If you look at its portfolio, these are the top holdings. There are 3 banks, private banks: Axis Bank, HDFC Bank and ICICI Bank, and there are long-term modes like Power Grid and Coal India, monopoly companies, and one US company, that is Microsoft, another mode there, and Bajaj Holdings, HCL, and Maruti Suzuki, a long-term automaker, from India's perspective a strong automaker. And if you further deep dive, of course we saw Microsoft top holding, then between about 3.3% to 4% we have Facebook, Alphabet, which is nothing but the parent company of Google, and Amazon. So this diversification, apart from the top India's stable companies, top 4 companies in the US, makes it quite unique. And of course there are other major players in India. Kotak Bank, of course, this would have crashed about 10% in the recent time, and still it is going to be a lucrative opportunity now because of its current valuation. Then Motilal Oswal Financial Services, Balakrishna Industries, NMDC, a very good mining company, and after its steel separation, this is even more value add to the portfolio. MCX, CDSL, Zydus, Infosys, Cipla, Dr. Reddy, almost like very stable long-term all-weather companies in the top holdings. I'm not going to read all the holdings here, but very interestingly, unique companies that are quite stable, and some of them are modes, and though not having too much of percentage, but still the way he approaches is completely on value investing principles, and even we can apply this and find some of the companies from this complete list. So they also have very clear indication the scheme is not for you if you track mutual fund NAV on a daily basis, which even I do not prefer doing, and to you the long term is merely a year or two. So generally they want you to keep at least 5-10 years time, and you believe investing should be exciting, so they expect you to not to have any excitement or emotion, and you fear rather than welcome stock market volatility. You believe you have the ability to time the market. You are impressed by fund managers who profess to be magicians. You prefer complex mutual fund products to be simple ones. You depend on periodic income in the form of mutual fund dividends because most likely you will be disappointed. So very clearly they are saying that we shouldn't be short timers, rather long time, and we should not be checking this fund very often. Rather continue to SIP and forget it. That's the way this fund expects you to treat it as investors. So in conclusion, Parag Parikh FlexiCapFund offers investors an opportunity to participate in both India's growth story while providing global diversification benefits. However, investors should always conduct thorough due diligence and align the funds investment objectives with your own financial goals and risk appetite. So if you are expecting something to turn around in a year or two, this is not the fund for you. Rather, if you are putting this into an SIP and wait for until your retirement, this is the exact fund that is meant for that kind of a goal. So long-term investment goals will well align to this particular fund, totally contrary to any small cap funds that we have seen recently. I am no way suggesting to buy or sell this particular mutual fund, and I am not a SEBI registered financial advisor. Please consult before making any financial decision. And of course, thank you so much for watching. Hope this video is useful to you. Please like if so, and also subscribe to my channel if you have not done.